So we like to prepare a reformulated balance sheet from the standard balance sheet. This is the problem number or exercise number 10.10 from the Financial Statement Analysis and Security Valuation 5th edition by Palepu. And you see, it has been mentioned, the title, Coffee Time, a Reformulation for Starbucks Corporation. So do you know which one is bigger between the McDonald's and Starbucks? Between the McDonald's and the Starbucks, which one is bigger? McDonald's is the bigger, and Starbucks is followed by McDonald's, or McDonald's is followed by Starbucks. Starbucks is followed by McDonald's, or McDonald's is followed by Starbucks. How can you use the followed by? McDonald's is followed by Starbucks, okay? You'll see that how Starbucks has grown over time. Okay, there's a long history, and you can look at some history of the Starbucks. Okay, we are right now interested with the financial statements of Starbucks. Below are comparative income statements and balance sheet for Starbucks Corporation, the retail coffee vendor, for fiscal year ending September 30, 2007. Along with the statement of shareholders' equity, read the statements along with the notes under them, and answer the following questions. We are asked to prepare these things, and we are particularly interested today to prepare a reformulated balance sheet for 2007 and 2006. We will look at other requirements after completing our understanding of reformulating comprehensive income, reformulation of comprehensive income statement, reformulation of equity statement. And reformulation of equity statement is reformulation of equity statement and reformulation of comprehensive income statements are integral. And we like to apply our learning about the reformulation of balance sheet. Okay, so we are not looking at the consolidated statements of earnings right now. We like to jump to the consolidated balance sheet. Okay, this is the balance sheet. This is before you on the page of 354. Okay, so let me take you to the board. What we like to do now, we like to separate the operating items and the financial items from the balance sheet. Okay, so what is the first item? We see the first item in the balance sheet is the cash and cash equivalent. Okay, so we have learned that for manufacturing or service company, I mean specifically for non-financial company, the operating cash is generally 0.5% of sales. Okay, so we have the sales number from the comprehensive income statement, but we like to focus on the notes provided. Okay, if you look at the notes provided in the financial statements, you will see that it has been mentioned regarding the cash and cash equivalent. $40,000 of cash and cash equivalents in both 2007 and 2006 is working cash used in operations. So we have got the precise number of cash to be recognized as operating cash. You probably can recognize, we mentioned that working cash is particularly the operating cash. Okay, So we have been given the precise number. We do not need to spend much time here. So let me write it for you here. If we have the operating assets in this part, and we write the cash and cash equivalent for 2006 and 2007, 2006 and 2007, we can write 40 million here, 40 million here. Note that I'm writing the numbers in million as the number has been mentioned here in the financial statements note. That's why it is 40, 40. Okay. Now let's look at the second short-term investment available for sales securities. Okay. We like to know that this investment is equity investment or debt investment. And if it is equity investment, you probably can recall we mentioned to look at the purposes. If the purpose is to move up the extra cash, in that case, it will go to financial, otherwise operating. But we have mentioned that if the investment is in debt security, it will be considered as financial asset. So let's look at whether the notes provide additional information. It has been mentioned that the short-term and long-term investment available for sale are debt securities. So you see that we have short-term investment available for sale. This is one. And we also have long-term investment available for sale securities. It has been mentioned these are debt securities. So you can take these items to financial or operating. What do you think? Write your responses in the chat so that I can confirm that you are getting the things. You are not merely thinking that these are happening for no reason. Okay. So what can we do? We can separate the financial assets, and we can also separate the financial liabilities. Okay. So you probably can recall that when we mentioned the net financial obligations, we wrote the financial liabilities first, and we wrote the financial assets after financial liabilities. Okay. So under the financial assets, what can we write? We can write the short-term investment available for sale in this way, as it is a debt item. How much the amount is? The amount is how much in million? I see 83.83. We can write the 1,000 amount in million, 83.845. So we can write 83.8. Okay. So 83.8 in 2007 and 87.5 in 2006. Okay. As we have got the information for also long-term investment available for sale, we can write it now. Okay. Okay. So this one we can also write together, as we have got the same information for both long-term investment available for sale. It is in the you can see that this amount is here 21 million in 2007, and you can say 5 million in 2006, 21 million in 2007, and 5 million in 2006. Okay, next, you would like to look at Short-term investments, trading securities. Okay, what do you think? Short-term investment, if it is in the trading securities, do we have additional information? We have some additional information probably. If you have the text, you can also follow from the text. It has been mentioned that short-term investment listed as trading securities are investments in equity mutual funds as part of defined contribution plan for employees. The corresponding defined deferred compensation liability is this amount is included in accrued compensation and related cost. Okay, so you see that we have made short-term investment listed as trading securities. This is particularly held for trading, and we have made investment in equity mutual funds. Our investment in equity mutual funds, and you see it might look to you that these are financial assets, but the thing is that this investment has been made for the sake of employees. We are serving employees through defined contribution plan, and the amount of this defined contribution plan has been invested in equity mutual fund. As these are connected employees, these are connected to employees who are engaged in operation. That's why it is part of the operating assets. Okay, so these are connected to employees. Otherwise, we would say that these are part of the financial assets, noting that it is a part of moving up our extra cash. Okay, so what amount it is? This amount is, we see the short-term investment trading securities is 73.6 in the 2007 and 53.5 in 2006. So I believe you have got the motive why we are using it here. Short-term investment trading securities. So how much amount is? We made 73.6 in 2007 and 53.5 in 2006. Next one. Accounts receivable. I believe there should be no ambiguity, but if it is notes receivable, you need to check it. There are some issues we discussed, or you can check it from the points we identified in previous class. Okay, accounts receivable. How much it is? 287.9 in 2007 to 24.3 in 2006 to 87.9 in 2007 to 24.3 in 2006. Next one. Inventories. Inventories is operating item. There should be no ambiguity. Inventories is 691.7 here. Inventory is 691.7. Then in next year, 2006, it was 636.22. 636.2. Okay, next, prepaid expenses and other current assets. Prepaid expenses and other current assets. So I have seen no more details about this. So you can think of this as a part of operating expenses. Operating, okay. So prepaid expenses and other current assets. Prepaid expense and other current assets. So we can write it as 148 point, how much it is? 757 should be 8, and 126.9. Okay, prepaid expenses and other currency. Next one, deferred income taxes. We mentioned that this should come from operating income. That's why it is to be considered as operating. Okay, deferred income taxes. Okay, deferred income taxes, the current liability asset portion. So it is here 129.5 and 88.77 should be 8. Okay, so these are from current assets. We have completed the portion of current asset. Now we like to move on the long term. We already have placed the long term investment available for sale securities here in the financial assets here. And next one is equity and other investment. So equity and other investment. So it is part of the long-term equity investment, as that this have not categorized in the current asset. This have been categorized in the long-term category. Okay, so how much it is? Long-term investment available for sale securities and equity and other investment. And what can we do? Equity and other investment. What do you think? Where we should place it? Operating or financial? We talked about it in the beginning of today's class. Equity and other investment. Where should we place it? Okay, operating. So we should place it here, equity and other investment. So 258.8 to 19 point, if it is 093, you can write here 1. So we do not have supporting more clarification about this. So these are here. Property, plant, and equipment. There is no more confusion regarding property, plant, and equipment. It should be operating. The amount is net 2890. If it is 433, it should be 0 here. And 2287, here it is 899, so it should be 9. Okay. Next, other assets. As there is no more supporting information, we need to write other information. Sorry, it should be write other assets. So it is 219,000. We can write 219.4 million. Here we can write 186.9 million. And other intangible assets and goodwill, I have no place. What can I do? I can take it here. Net financial obligations, financial liabilities will be written first here. Okay. So I'm writing here other intangibles, which is 42 million, and also 37.9 million here, as it will be Okay. Okay, financial liability, other intangible assets is here. Now, whatever the goodwill is this amount, it is operating part. No more ambiguity about this. 215.6 million and 161.5 million. Okay, so we have got the total operating assets here. Okay, can you please sum up all the total operating assets? We'll talk about the financial liabilities. You make the calculation, and I am trying to separate the below items. Sum up and tell me the value. Okay, by this time, what I do, I see that I have some financial liabilities. Okay, we have other intangibles, then here it is goodwill. Oh, I need to separate these things out. Good. Yeah. Have we got the summation for operating assets, total operating assets? Now what I'm doing, yeah, these are financial assets. Let me write here. And okay, financial obligations. For 2017, it is 7458.3. Could you check? We have 1,000 amount of only this one, property, plant, and equipment. We do not have other 1,000 amount. So I cannot agree that this amount is much bigger. Yeah, this amount should be 4,997. Obviously, this number is in million. And you'd get how much? Obviously, it should start from 4063. Okay, 4063.0. So is the okay? No, it is not financial obligations. It is the let me take it here. Okay. Okay. What is it? It is the total operating assets. Okay. So it is the total operating asset, this amount. So we like to finish the net financial obligations. Okay. So in financial obligations, what can I do? We can see that we have which are our financial obligations. We see we have long-term debt. You see the long-term debt. Okay, yeah, it should start from current liabilities. In the current liabilities, let me separate it out. Okay. In the financial obligations, we from the current part, we have commercial paper and short-term borrowing. You see in the current liabilities side. Okay, in this part, commercial paper and short-term borrowings. So this is part of our financial obligations. Obviously, it is current portion, commercial paper. Let me write here this sum on commercial paper. 710 million, 710.2, obviously. It should be 700.0 for 2017 and 2006. Okay, next. Current accounts payable. Obviously, it should be operating liabilities. Okay. So we can write here accounts payable. It is 390.8 million in the 2007, and in the 2006 it is 340.9 million. Okay. So I have to take it to more distance position. I'd like to move it. Okay. I'll try it later. After the accounts payable, I have the accrued compensation and related cost. Accrued compensation and related cost. This is how much? 332.3 million in 2007 and 288.969 million in 2006. Okay. Then accrued occupancy cost. Accrued occupancy cost. How much it is in 2007? It is 74.6 in 2007 and 54.9 in 2006. Then accrued taxes under the current liabilities, and these are also part of operating liabilities. I need to take it down. You use the Microsoft whiteboard. I'm not very handy in using the Microsoft whiteboard. I need to move all this. Okay, it's better. I'm keeping it here. Next one, what I have written on accrued compensation and accrued occupancy cost I have written here. Next, accrued taxes. It should be back then. Accrued taxes. If it is 92.5 million in 2007 and 94 million in 2006. Okay, someone has written that he's doing 3 classes. Okay. Note that here what I'm doing an exercise, and you can consider it is out of the class. We have finished the class part and we are doing an exercise together. Okay. So if you are tired, you can leave the class and you can check the recording later. Okay. So this is not a part of the class that I will be doing the exercise together with you, a long exercise. Okay. Obviously it takes time. Otherwise, I would also, if it were class, I would show you that these are the ways that you can solve it and do solve it. And here we are doing an exercise, okay? Then other accrued expenses. Other accrued expenses. So obviously it is operating part. So how can we write the other accrued expenses? 257.4 because of 369. And for 2006, we can write 224.154, 224.2. Okay. Next, deferred revenue. We talked about the deferred revenue in the revenue analysis, but here deferred revenue comes from the operating issues. And deferred revenue of 296.9 for 2007 and 231.9 for 2006. Next, other long-term liabilities. It should be here. As long as we do not have other, okay, we have completed up to deferred revenue, but we see the current portion of long-term debt. So our long-term debt is a financial obligation. So we can write the long-term debt here. I mean the current portion of the long-term debt. How much it is? Current portion in the financial obligation. If we write in million, it should be right 0.775. It should be 0.8. And in 2006, we can write 0.7. Okay. For the part of, okay. So we have written these two in the financial obligations. Do we have any other part? Yeah, we have the after the current portion of long-term debt, our total current liabilities is done, but we have this one, which is long-term debt. So long-term debt is obviously part of our financial obligations. So we can write the long-term debt here. So it is how much? 550 million 0.1, and here it is 1.9. We can write it is as 2. Okay. So okay. So our financial obligations are this amount, and here we see that is there any remaining in the operating liabilities part? What do you think? Out of the current liabilities, we have an item here, other long-term liabilities. We do not have any information that it is about what. So we can write in operating liabilities, other long-term liabilities. So you can write here 550. No, it is not 550. It is 354. Okay, there is okay. It is of which one? 231. 231 is a part of deferred revenue. These are here. But for other long-term liabilities, we have a note here regarding the clarification of other long-term liabilities, probably. Okay. In the statement of equity, the statement of equity, you will see that there is a, okay, we have a balance sheet, we have liabilities and shareholders equity. Yeah, okay. Here you will see that we have a stock-based compensation. Stock-based compensation. We talked about that, how it creates a problem when we talked about in liability analysis. So we'll talk about in more detail about this, but here the stock-based compensation will be excluded from the shareholders' equity, and it will be part of the operating liabilities. So in other long-term liabilities, we already have how much amount? 354.07 for 2007 and 262.8 or 9 in 2006. So we need to add the stock-based compensation here. How much stock-based compensation? 106.373. 106.373 for 2007. 106.37. So how much it is in total? Tell me the figure in your chat, and let me find out the corresponding amount for 2006. We do not have a corresponding amount in 2006. So it will be as same as, okay. So how much it is? Find out it. Is it 460? Yeah, 460.44. Okay. So you see the list of all operating assets, all operating liabilities. So you get the net operating asset here. Net operating asset, how? If you subtract the operating liabilities from the operating asset here. So if it is 4,997 million, 0.7 operating asset, we have operating liabilities of 460. You get the difference of 3,000 something as net operating assets, and same for 2006, you'll get 2,500 something as net operating asset. Okay. For the financial obligations part, we have these financial obligations. Okay. So what is this amount? Can you please sum up and mention this amount, the financial obligations? You get the financial obligations. By this time, I'm adding the remaining amount of cash, which will be part of the financial asset. You probably can recall that in the cash and cash equivalent, I mentioned that 40 million will be operating cash in 2007 and 2006, but you see that our cash and cash equivalent is excess of 40 million. So the remaining amount will be part of the financial. So out of the 281 million, if we show the 40 million in operating, we have how much remaining out of 281? For the financial, how much we have remaining? We have a remaining cash 241.3 million in 2006, sorry, 2007. And in 2006, if we subtract 40 million from this 312 million, we will get 272.6. 272.6. Remember, this cash is part of financial, and the okay. So what is it? These are financial obligations. Sum up, right? For 2007, it is 1,261. For 2006, it is 702.7. Okay, you see the net financial, financial obligations, not the net. Net it will be here. Okay, what about the financial assets? Some of this financial assets. Note that it is 83.8. What is the net financial assets in 2007 and 2006? For 2007, we have 346.1, and for 2006, we have 700. How it is 700? Remember, it is not 875. It is 87.5. Yeah. Okay. So 365.1. Now, how you get the net financial obligations? Net financial obligations. What is it? It is the total financial assets, and it is the total financial obligation. This one, it is the total financial obligations. Now, if you subtract the total financial assets from total financial obligations, you can write it in a minus amount, no problem. But if you sum up this and this, what will be the amount here for the net financial obligations? 1,261 minus 346.1. What will be the amount here? 914.9, we can write 915, and for 2006 it is to be 300 something. Yeah, 337.6. Okay. For rounding up, some errors will happen. So you see that how we have made the reformulated balance sheet from the standard balance sheet. So this is the way that how we can convert the standard balance sheet, the reformulated balance sheet. So when you have the reformulated balance sheet, you have the reformulated income statement, you can get some modified financial ratios which have been asked here. You see, it will be changed from the standard balance sheet, the reformulated balance sheet or reformulated financial statements. Okay. So let me check some questions. One was the question here. Okay. Net deferred tax is an operating asset. Is it because the value is positive? I have not got the point why deferred tax is in the side of operating asset. Okay, we discussed about the deferred tax and deferred liabilities when we discussed about how to distinguish the operating and financial components of balance sheet. We talked that deferred tax assets and deferred tax liabilities arise for the difference between the tax statement and the financial statement, and it generally arises because of the operating reasons. That's why when you see the net deferred tax assets or deferred tax liabilities, this will be considered as operating assets and operating liabilities respectively. Okay. So let me stop the